got a question for you. Let's just say you are CEO of a homeowners insurance company. You're using your family's money. You're living in the state of California. Every single policy that's being written is losing money for you. How much longer until you stay in the state of California and say, guys, we're leaving the state of California. It's just not worth it for us. Because right now, it looks like California is doing everything in their power to push out every single homeowners insurance company in the state of California. Here's why. California has 40 million people living there, of which 55% of them own a home. However, in 2023, nearly 7% of all real estate deals in the state fell out of escrow. Do you know why? Because the buyers couldn't afford the insurance. They're like, I just can't afford to pay the homeowners insurance here. Makes no sense. I'm out. I'm not buying it. Matter of fact, 7 insurance companies in the state of California, State Farm, Allstate, Farmers, USAA, Travelers Nationwide, and Chubb recently limited new homeowners policy. It's so bad that in 2022, Allstate quietly paused writing new home and condo policies in an email to Bankrate. Here's what Allstate said. The cost to insure new home customers in California is far higher than the price they would pay for policies due to wildfires, higher costs for repairing homes, and higher reinsurance premiums. Why the hell would anybody keep doing business in California when it comes down to homeowners insurance? The way they're going, do not be surprised when all of these guys eventually say, we're done with the state of California. We're going to talk about that today. If you get value out of this video, give it a thumbs up and subscribe to the channel. I got a question for you. So wildfires, they're measured by acres. Matter of fact, right now, while you're watching this, there's 52 active wildfires in America being managed. This year so far, roughly 2.1 million acres of America experienced wildfires. Now, go to 2023. If I were to ask you total number of acres of wildfire in America, where would you rank it on how bad last year was in the last 25 years? What would you say? Would you say the worst? Maybe the second worst? Maybe the third worst? What if I told you in 2023, it's the least amount of acres of wildfire in the last 25 years. Let me give you the data here so you can verify it. According to National Interagency Fire Center, last year, we had roughly 2.693 million acres of wildfire. Go to the last year, 7.5, 7.1, 10 million acres, 2020. Then it's 4.6, 8.7, 10 million acres in 2017. And it's 5 million, 10 million acres in 2015, 3.5, 4.3, 9.3, 8.7, 3.4, 5.9, 5.2, 9.3, 9.8, 8.6, 8 million, 3.9, 7.1, 3.5, 7.3, 5.2. The last time we had fewer acres of wildfire in America was in 1998. That means 25 years. It's been the lowest ever. Yet, this great state of California thinks, guess what? We're going to force you. You better do this or else. So guess what insurance companies are doing? Let me give you stories. May of 2023, State Farm announced it would no longer accept new business and personal property and casualty applications. Allstate State Farm credited historic increases in construction costs, outpacing inflation, rapidly growing catastrophic exposure in a challenging reinsurance market. By the way, the following March, State Farm stated it would not renew around 30,000 home insurance policies beginning July 3rd of 2024. Farmers came out and said, look, moving forward, new policy applications are going to be limited due to record-breaking inflation, severe weather events, and reconstruction costs. From summer of 2023 to summer of 2024, 5 other companies just said, guys, we're done. Amgard, Falls Lake, Hartford, Tokyo Marine Insurance Company, American National stopped writing new homeowners insurance policies in California, putting immense strain on the home insurance market. This is driving California homeowners insane because they're like, dude, I can't even buy homeowners. Where do I buy this stuff from? You need it to buy the house. I can't even figure this thing out. Combined, State Farm, Allstate, Farmers, USAA, Travelers, Nationwide, and Chubb dominated just under 35% of California's home insurance market in 2023. However, they're sitting around saying, I don't know if we can handle this moving forward if it keeps going like this. If you like numbers like I do, we wanted to go a little bit deeper to kind of see what the numbers looking like. Here's a 2023 California property and casualty market share report. Number one is State Farm. They have roughly 9.1% of the market share. You know how much they lost last year? $7.567 billion. Farmers has 7.8%. They lost roughly $5 billion. Berkshire Hathaway has 6.1%. They lost $4.5 billion. Allstate, 4.9%. They lost $4.1 billion. Auto Club Enterprises Insurance Group, 4.5%, lost $3 billion. You can go down the list and take a look at this. But if you're running the company, what are you going to say? If this is your parents' money that they worked hard for, that you're responsible for managing, would you say, hey, we're running a nonprofit. I know my parents ran a profit, but who cares about making money? Let's continue because we have to protect these families. What are you talking about? It's not how capitalism works. You're probably going to sit there. If it's your money, you're going to say what? Guys, give me 5 reasons why we should stay in California. Crickets, crickets, crickets. Okay, so what's our step on how we live in California? I think we need to first do this, then we need to do this, then we need to do this. Perfect. Why don't we put a 2 to 3 year plan on how we're going to leave California quietly and don't tell anybody about it? Game. Let's roll. Execute. Boom. What would you do if this is your business? Now, here's the thing about California. If you love regulation, California is like the god of regulation. They love regulating everybody. They think they know what's best for you, especially homeowners, insurance companies. They're like, look, here's what you got to do. Proposition 103, passed in 1988. Proposition 103 was designed to protect California policyholders from unfair insurance rate hikes for auto, property, life, and casualty insurance. What's unfair rate hikes? If you have 50 companies competing for insurance, guess what they have to do to get the premium? We're going to sell it lower than you for this age category. We're going to sell it lower than you for this size of homes. That's called capitalism, not over-regulation. You drive people out, California. Next one. Rate approval process. Insurance must submit any rate increase over 7% for approval by the California Department of Insurance. Let me get this straight. So we want to raise it more than 7%. If the client's not going to like it, they're going to leave me to somebody else. Who cares how much I increase it? If I increase it 30%, someone's going to be like, look, babe, call somebody else. And I had an insurance. We pay a lot of money for insurance every year. Rates went up. Babe, price it up. Boom, we left. Oh, no, please don't leave us. We're out of here. I'm not paying this rate. That's what capitalism does. Number 3, interveners. Consumers or their representative can contest rate increase under Prop 103. You gotta love this one though. This is the main one here, the California Fair Plan that they started in 1968, which was to, property insure challenges following the brush fires and riots of 1960s. It was designed as a last resort insurance option for homeowners who couldn't obtain coverage in traditional insurance market due to high risk factors like wildfires. Okay, all right, cool, noble. Let's come out with something like this, but is it sustainable? This act, with increasing wildfire risks and insurance exiting California market, the Fair Plan has seen a dramatic rise in new policies. You ready? As of June of 2024, its total exposure now is $393 billion. $393 billion. By the way, additionally, new policies have skyrocketed in 2022 with 65,500 people that couldn't get it traditionally that they got it here to 2024, 134,576, more than doubling in a span of 2 years because people can't get it anywhere else. And as of 2024, over 400,000 people are using this plan. So what are the financials behind it? The Fair Plan is a pool of all property and casualty insured. Each insurer shares in profits and losses and expenses based on its market share. This is like Obamacare for homeowners insurance, okay? The Fair Plan Act writes premiums have more than doubled since 2021, driven by the increasing number of new policies as insurance continue to retreat from high-risk areas. So if you're in California, you want to do business, you're forced to do this. You don't have a choice. It's purely force or get out. Watch this. Again, look at the brilliance of these people that just want to regulate, who don't know what it is to run a company. Okay, California Department of Insurance is looking for the top 12 homeowners insurance companies in the state to commit. Hey guys, I got a great idea for you. What's that? We want you to commit to writing a minimum of 85% of their policies in under-reserved areas, particularly in high-risk wildfire zones. You know what that kind of means? Let me kind of explain it to you from a life insurance agent side. Hey, you, all these 12 insurance companies, we want you to protect all these clients, 85% of them above the age of 80. We want you to sell them life insurance policy. You're like, they're above 80. Yeah, so what? You don't think they deserve life insurance? They're above 80. Life expectancy is 78. You mean to tell me sell them an insurance policy even though they're going to die in the next couple of years, so take the loss? It's the noble thing to do. California, we'd love to stay here. We're out of here. You don't make any sense. So now, hey, why are the premiums going up? This is ridiculous. Rising wildfire risk, rate increase restrictions, underpricing and profit caps, increased litigation and claims, lack of flexibility for catastrophic risk management. Why would someone stay there? This is when you realize in a community, remember that restaurant that was there you used to always go to with your family the last 30 years and they're gone? You wish they were still there, right? Remember the place they used to go to and get your shoes shined, and when your shoes would break or something would happen to them, they would fix it? Don't you miss them? They're out, right? Do you remember that one place you used to go to, they used to make you small little sandwiches, Italian sandwich? It was awesome. Remember that? Remember Luigi made it for you? How awesome was that place? It's gone because regulation and high prices push those awesome small businesses out. Poof! Story is gone. You can no longer go there. You know you needed them. you know you like them, but they can't stick around if I don't make money. And this is the story that comes up by this lady named Amy Bach, right? Well, listen, those 12 insurance companies, you got to protect 85% of these guys, even though there's high risk. It's what you got to do. You know, the situation is hurting consumers badly. It doesn't feel like it's going to resolve on its own. And here's what we're proposing you do. And then they ask him, what if it doesn't work? If it doesn't work, then I guess we have to go back to the drawing board. No shit, Sherlock. What are you going to do if it doesn't work? You need businesses to make money. Can you imagine? Let me give you a little bit more logic to bring it to you. Imagine you work for a company. The boss at the top says, guys, listen, you have to agree to work for $5 an hour. You want me to do what? You have to agree to work $5 an hour. Why? Can't afford to pay you right now. What do you mean work for $5 an hour? Listen, I mean, we have to do this. I still want you to work 60 hours a week. I'm not going to work $5 an hour. These guys are flipping it. And they're telling business owners, you have to work for free. Who the hell in the right mind is going to do that? No one. But California doesn't understand basic mathematics. This is why in the last 4 years, California has lost $1 trillion of money under management that left. Texas got the most people that went there. New York lost $1 trillion because of bad policies like this. If they continue like this, and you're living in California, and you all of a sudden are wondering what are you going to do with homeowners insurance, the level of consequences that can hit you in many different ways can be catastrophic. So guess what? Either vote better leaders, either be more vocal, either do your part or get the hell out. But you have a few choices to make as an individual because California is just not getting any better. If you got value out of this video, give it a thumbs up and subscribe to the channel. If you're watching the same Pat, you always take a shot at California. How about you living in Florida with your hurricanes? Guess what? We did a video on that. It's called Hurricane Blackrock. If you've never seen it, click here to watch it. Take care, everybody. Bye-bye, bye-bye.